Welcome aboard Chain Train, your ultimate source for all things crypto. In today's episode, we're diving into some groundbreaking developments in the world of cryptocurrency, from Bitcoin's recent surge to the introduction of new regulations and national crypto assets. We'll also be exploring how AI is shaping the future of crypto and the rise of crypto wallets as a service. Let's get started. Bitcoin surged past $100,000, recovering from a dip below $90,000, driven by positive inflation data and regulatory optimism. Better than expected consumer price index data suggested the Federal Reserve might lower interest rates, encouraging investors to explore riskier assets like Bitcoin. Additionally, a Reuters report hinted at potential regulatory changes, with the SEC possibly clarifying its crypto policies and pausing some enforcement actions. This news has been seen as favorable for the cryptocurrency market, especially with new leadership at the SEC potentially offering clearer guidance for crypto exchanges. AI cryptocurrencies are emerging as a fusion of artificial intelligence and blockchain, offering new ways to power and scale AI systems. Unlike Bitcoin, these tokens are designed for specific purposes, paying for AI services, creating decentralized AI networks, and securely managing data. This decentralization democratizes AI development, enabling cost-efficient, flexible infrastructure and fair data usage. Projects like Bitensor Render and WorldCoin showcase applications in collaborative AI training, GPU access, and identity verification. For enterprises, AI cryptocurrencies promise cost savings, enhanced security, and new business models, though challenges like scalability and compliance remain. A 63-year-old former engineer lost RM9, 47 million in a cryptocurrency investment scam. The victim was lured by an advertisement on social media in July, leading him to a WhatsApp group where he was promised a 50x return on investment. Between October and December, he made 29 transactions to 11 bank accounts. When he checked his investment and saw a reported profit of RM 88 million, he was asked for an additional RM 800000 to withdraw it. The victim refused and realized he had been scammed when the scammers became unreachable. The case is under investigation. Boerse Stuttgart, a major German exchange, has seen its cryptocurrency trading business grow to account for 25% of its total revenue. The exchange reported a nearly threefold increase in crypto trading volume in 2024, with over $4.3 billion, $4.45 billion in custody. Bitcoin contributed to almost 50% of the crypto revenue. Boerse Stuttgart, which serves both professional and retail investors, now has over 1 million crypto clients. It offers services through its digital exchange and Bison app, including a fully insured staking service in partnership with Munich Re. The exchange plans to expand further across Europe in 2025. James Howells, a UK resident, lost Bitcoin worth Rs. 6,290 crore due to a single mistake. In 2013, he placed a hard drive containing his cryptocurrency details in a plastic bag, which his former partner accidentally discarded into a landfill. Despite the Bitcoin's value soaring, James appealed to the High Court to search the landfill, offering to share any profits if the hard drive was recovered. The court rejected the appeal, citing environmental laws and lack of legal grounds for ownership. The landfill holds 1.4 million tons of waste, making retrieval incredibly difficult, and James's hopes were dashed. Following the EU's introduction of the markets in crypto assets regulation, many digital asset businesses, including crypto exchanges and NFT marketplaces, are seeking to expand operations into the UAE. The country's stable and business-friendly regulatory environment is attracting firms from the EU, particularly to Dubai and Abu Dhabi, where government incentives and financial support are available. The UAE is seen as an ideal destination due to its favorable regulations and planned regulatory developments. The trend is expected to grow as EU firms face higher compliance costs and stricter regulations. A BlackRock report reveals that cryptocurrency adoption has reached 300 million users in just 12 years, outpacing mobile phones, 21 years, and the internet, 15 years. This rapid growth highlights a shift in global financial habits driven by decentralized finance and blockchain. Bitcoin, leading the charge, has become a preferred asset amid concerns over inflation and traditional currencies. The rise of younger tech-savvy generations and simplified investment methods, such as Bitcoin ETFs like BlackRock's iShares Bitcoin ETF, are further boosting adoption and making Bitcoin more accessible for institutional and retail investors. Dfns, a wallet as a service platform, raised $16 million in Series A funding led by Further Ventures and other investors like Bpifrance Hashed and Wintermute, with over 130 clients including Fidelity, ABN AMRO, and Zodia Custody. Dfns secures over $5 billion in assets. The company focuses on institutions and has created 10 million wallets to date. It plans moderate growth, expanding staff from 25 to 35, targeting markets in the US, EU, UK, and UAE. Despite competition from well-funded firms like Fireblocks, Dfns stands out with broad blockchain compatibility and a clear distinction between wallets and key management. Azerbaijan has launched its first national cryptocurrency PortCoin, developed by Mobile Payment Solutions under the PortManet brand. PortCoin operates on the Binance Smart Chain and follows the BEP20 standard. It allows users to buy, sell, and convert cryptocurrency via an online e-wallet with the option to convert funds into Azerbaijani manats. Since November 2024, PortCoin has been operating in a regulatory sandbox overseen by the Central Bank of Azerbaijan. Mobile Payment Solutions holds a license from the central bank granted in July 2024 for its cryptocurrency services. Metaplanet, a Japanese tech company, is launching a Bitcoin-focused magazine to educate 1 million Japanese readers about cryptocurrency. Known as the Japanese MicroStrategy, Metaplanet aims to increase its Bitcoin holdings from 1762 to 10000 BTC by 2025. The company's share price has surged 1,700% since it began acquiring Bitcoin in April 2024. Backed by Capital Group, which owns 5% of Metaplanet and is also the second largest shareholder in MicroStrategy, Metaplanet seeks to position Japan as a leader in the Bitcoin revolution and provide actionable insights on BTC usage and security. That wraps up another exciting ride on Chain Train. We've covered the latest Bitcoin news, emerging crypto trends, and national innovations with a dash of AI mixed in. Stay tuned for more insights into the ever-evolving crypto landscape. Until next time, keep riding the chain train.